In news from Sri Lanka, the Central Bank of Sri Lanka held interest rates steady for a third straight time on Wednesday, saying the prevailing tight monetary stance is crucial to taming still high inflation and restoring economic stability. This comes as the island nation awaits a crucial IMF funding program, which hinges on financing assurances from creditors.
Sri Lanka's central bank held interest rates steady for a third straight meeting on Wednesday as widely expected, saying the prevailing tight monetary stance is crucial to taming still high inflation and restoring economic stability in the crisis-hit nation. The standing lending facility rate was held steady at 15.50%, while the standing deposit facility rate was kept unchanged at 14.50%, remaining at their highest levels since August 2001. The board was of the view that the maintenance of the prevailing tight monetary policy stance is imperative to ensure the monetary conditions remain sufficiently tight to rein in inflationary pressures, the apex bank said in a statement. This comes as policymakers are still grappling with challenges on several fronts, including a shortage of foreign currency, a collapse in the rupee, a steep recession, and slowing global growth. The National Consumer Price Index, however, eased to 59.2% in December after a 65% rise in November, data released this week showed. The island nation of 22 million people is trying to clinch a $2.9 billion IMF funding package, which hinges on financing assurances from creditors. Neighboring India told the IMF last week that it strongly supports Sri Lanka's debt restructuring plan. Colombo now awaits endorsement from China and Japan, the other bilateral creditors.